So inflation is the path that all politicians have chosen over austerity. All of them have chosen that. So yes, I do see, and even with the lying metrics, the bottom line is if no one wants to hold dollars or treasuries anymore, we haven't even begun to see what inflation looks like. But with all else being equal and everything being balanced, no one's talking about all of these liabilities that have to be paid for in an environment where our treasury sales are, by the traditional countries that owned our treasuries, are falling by the wayside. We're supposed to believe that the United Kingdom and Ireland and the Cayman Islands really are going to hold our treasuries and buy that many. The United Kingdom is a broke country buying the debt of an even more broke country, us. Jim Willey, someone who I respect a lot, says that the Fed's paying them under the table to buy our treasuries to keep the system going. Maybe true, maybe not, don't know. But any way you look at it, every politician and every system since the Roman times have chosen inflation over austerity. Inflation will come roaring back, and it's higher than we are led to believe. Well, I mean, I think first of all, it's very interesting. Gold is at all-time highs with virtually no media fanfare. That's a big deal, of course. And as far as macro points, I mean, look, I think the bottom line here is that we're hearing more and more and more and more about inflation and how that impacts things. And I think the macro trend here is that this is a currency that is being eviscerated in value to the tune of $100,000 of debt per second. And what we are being told by the mainstream is not true. That's the bottom line, is that the mainstream is trying to create villains, and the mainstream lies, as does the Bureau of Labor Statistics. I'll give you one example. The Bureau of Labor Statistics, they should just take the L out of the BLS and call it the BS, because we are told that tomorrow, on Wednesday, the Bureau of Labor Statistics will downward revise jobs for April 2023 to March of 2024 by up to 1 million jobs. That means that all of the beat expectations recorded in the past year will have turned out to be misses expectations, and the job market is in far worse shape than the administration would admit. It's the exact same thing about the way that they calculate inflation. If steak is too expensive, they take it out and put ground beef in. Coffee was up 80% last year, and in April of this year, they took it out of the measurement of the CPI. It's a government who is trying real hard to mask just how bad things are with changing the definition of a recession, lying about the employment statistics that every month they keep revising it. Now they'll revise the entire year and down by 1 million jobs, really? And then lying about inflation and money creation. When I was first in the industry, they used to publish something called M3, broadest measurement of the money supply. They cited that as being archaic and expensive, so took it out of circulation. So now trying to decipher how much money is being pumped into the system and then the effects of it through the BLS measurements that lie about inflation, they lie about unemployment. It's certainly very difficult, and I think most people feel something's not right, even if they can't quite articulate it, and then they look at the statistics and we're being told, no, everything's great, right? Everything's great. So you end up feeling, am I crazy, or am I the only one feeling this, or am I conspiratorial, or no, or am I just actually seeing things for what they are? So to me, that's the big thing, and painting pictures of greedy grocery store owners instead of the greedy government that is creating $1 trillion of debt every 100 days, when 1 trillion seconds ago was 31,688 years ago. The most important thing to understand is that every single time, always, inflation is an increase in the money supply. It's a monetary event. You inflate the money supply. Rising prices, and even the way that we're told to understand inflation, the consumer price index, rising prices are the symptom of inflation. Inflation always is an increase in the money supply, and that is a very large macro trend where the dollar is being viewed as a currency that is being inflated away by many of the countries around the world. So to me, that's the biggest trend that I focus on is the mismanagement of the world reserve currency, and the statistics that supposedly gauge its health are seriously flawed. Well, the point that is being missed, I mean, in the 4 years that this administration has been in office, the CPI has gone up 25.1%, the producer price index up 26.8%, and the cost of farmers to produce, package, and deliver the food is up 30.7%. That's their cost, the input costs as a result of printing more money over the last 4+ years than in the history of the country preceding it. So in essence, they are ignoring what the real cause or what the real root of inflation is. In other words, some people think inflation just means price going up, and they believe all kinds of things because of it, from corporate greed to greedy grocery store owners. But that lets the real culprit off the hook. The real culprit is the government, who creates more and more and more money, and that is inflating the money supply. That is the cause, or the real cause of inflation. If you have more dollars chasing the same amount of goods and services, you see a general rise in the prices. That's price inflation. That's what they're talking about. But price inflation is the symptom of the problem, which is more money chasing those goods and services. And the more you produce money, to the degree that we have, look, the Fed's balance sheet at the end of 2008 was $800 billion, and just a few months ago was $9 trillion. It's just under that now, $8+ trillion, because of quantitative tightening. But the point is that that's $8+ trillion that they injected into the system over the last 15 years. And then you look at the Trump administration. Well, they created $8 trillion in debt over his 4 years, and Biden more than that. So all of these administrations, regardless who it is, they're mismanaging the currency tremendously by massive money creation and debt creation. And that is creating a rise in all of the inputs in terms of labor, in terms of oil, in terms of seed, in terms of fertilizer, most of which comes from Russia. Everything has gotten higher in price, and so that has to be passed along to the final product. In essence, they're focusing on price inflation instead of the cause of inflation, which is money creation, period. And so it's treating the symptom rather than the cause.
Yeah, and isn't it also coming from the supply side as well? We're still feeling the ramifications of all these lockdowns and all these disruptions of the supply side.
And that would go to price inflation, to your point. Yes. And there is. When you have distortions or disruptions in the supply chain, you have isolated price inflation. But inflation in general inflation is 100% every single time, according to Milton Friedman, always and everywhere a monetary phenomenon, meaning they created more money. But you can exacerbate inflation through price inflation, through distortions of supply chains. You're right, and disruptions in supply chains. So that's true. But when governments and central banks create money out of thin air to sustain their borrowing and spending, that is inflation, period. But when you talk about the effects down chain, sure, you have disruptions in the supply chain and will only exacerbate it. And you can have price inflation without monetary inflation, because let's just pretend the price is stable, but you have supply chain disruptions that would increase the price. But that's not the root cause of it, of what we're talking about here. That is an isolated instance based upon a supply chain disruption. But general price inflation is always a monetary phenomenon. It's an increase in the money supply, period. I don't think gold will be confiscated. When Roosevelt confiscated gold right over my shoulder there in 1933, gold was currency. Everybody owned it. And it was a different time. There was patriotism abound. But everyone had it in their possession. Gold was money. Now it's not. The allocation of gold in the United States is 0.5% from Joe and Jane Sixpack to the Harvard Endowment Fund. The consequences globally would be severe if our creditors and the rest of the world feared Venezuelan-style nationalization of assets and eminent domain the way that Venezuela did things. No one would trust us again. We're already low on the trust right now. So instead, you have two ETFs, SLV and GLD. SLV is the largest stockpile of silver in the world, and it's administered by JP Morgan and BlackRock. JP Morgan, who paid the largest fine the Justice Department ever laid out for manipulating the metals market, is still allowed to be the custodian of the world's largest silver trust. And JP Morgan and HSBC Bank are involved in custodianship of GLD, the fourth or fifth largest stockpile of gold in the world. So they can come in on a Friday night, close those two accounts, put everyone's money in the money market, be sitting on the largest stockpile of silver and the fourth or fifth largest of gold, held by the bullion banks that suppress the market, and say, what? We didn't do anything. We didn't activate eminent domain. We just closed these two accounts. And this is our right. You can still buy physical metal. Now, as far as silver, did I share my screen with you a week or two ago and show you those charts?
Yeah, you did.
Yeah, and so, I mean, to me, there's a lot more to silver than meets the eye as to why it's not going higher. But I will tell you, on top of, and people should go back and look at those charts, because you have 8 banks in the West holding down the price of silver to the largest concentrated short position ever in any commodity ever traded. This is not normal. I believe has a lot to do with the military-industrial complex. We've talked a lot about India importing over 700 million ounces of silver over the last 3 years, and much more than that probably, which is 10 times more than there are bars available for delivery on the COMEX. And we've talked about 3 billion ounces of silver traded per day on the LBMA. That's 3.5 times annual global mine supply, with only 300 million ounces available to be delivered. They're distorting the price through paper deliveries. I think I probably last week talked to you about the validation I've had from 2 mining executives who told me China's flying all around the world buying silver from Latin American mines in unrefined form, doré, bar, and concentrate, as much as they can buy, doubling the price that the West will pay for it, and shipping it home and refining it there. It's not coming off of an exchange. No one noticed it. This comes from the second largest producer of silver in the world, China. They have now, as of just recently, become a net importer instead of a net exporter, because they produce so many and mine so many byproduct metals. They stumble across silver. The majority of silver that comes to market is a byproduct of mining other metals. Only 20% of the silver that came to market, 25% last year, was from companies that specifically mine silver, and that's because it's found in nature in a form called epithermal, near the surface. Epidermis, your skin, epithermal, very near the surface. Big deposits were found a long time ago. So we've talked about all that. But now to find that silver, or China's becoming a net importer instead of a net exporter, which they were a huge exporter, is massive. And I think that's something people need to understand, is that the Chinese and the Indians are beating us at the game by using the suppression of the paper price by the West to drain the shelves. And they're going as far as buying unrefined silver all around Latin and South America